Good morning, folks. My name is Curtis Chandler, President of PFL. We hope that everyone had a great weekend. We hope that you are enjoying our early morning briefing. We do it all for you. We are live 7 a.m. Eastern Monday. If you're viewing this podcast through our reports and are up at 7 a.m. Eastern on Mondays, please tune in next week live instead. Please like us and follow us on LinkedIn and pass on the good word. We would certainly appreciate it, and you could win a PFL Railcar. At the end of every quarter, which happens to be the end of this month, we have a draw for those that do. In this quarter, we are giving away a PFL Railcar of the winner's choosing. Our fleet consists of boxcars, tank cars, both white and black, hoppers, and coal cars. Our quote of the week is from Martin Luther King. This man requires no explanation and was a great man. Martin once said, if you can't fly, then run. If you can't run, then walk. If you can't walk, then crawl. But whatever you do, keep moving forward. Folks, it goes without saying we really like this one. Whatever you do in life, keep moving forward. Even if they are baby steps, the big leaps will happen. Never give up. U.S. employment. The reopening of the U.S. economy pushed weekly filings for jobless claims to historic levels, said the Labor Department last week. A seasonally adjusted level of 376,000 new claims were filed in the week ended June 5th. Another 71,292 claims were made under a special program helping freelance workers and others not normally eligible for aid. 2,000 less than the previous week, the report said. The Dow closed higher on Friday of last week, up 13.36 points, and down 276.79 points week over week. The S&P closed higher on Friday of last week, up 8.26 points, and up 17.55 points week over week. The Nasdaq closed higher on Friday, up 49.09 points, up 254.93 points week over week. In overnight trading, Dow futures traded higher and are expected to open up this morning 10 points. Oil traded up again last week, settling again at multi-year highs and recording a third straight week of gains. The IEA said in its monthly report that OPEC Plus would need to boost output to meet demand to recover pre-pandemic panic levels of 2020. Goldman Sachs said oil could reach $80 a barrel by this summer as rollouts boost global economic activity. WTI rose on Friday, up 62 cents a barrel to settle at 70.91 cents a barrel, up 99 cents a barrel week over week. U.S. commercial crude inventories decreased by 5.2 million barrels week over week. U.S. crude oil inventories are 4% below the 4-year average for this time of year. Total motor gasoline inventories increased by 7 million barrels week over week and are at par with the 5-year average for this time of year. Distillate fuel inventories increased by 4.4 million barrels week over week and are 5% below the 5-year average for this time of year. Propylene and propane inventories increased by 5.5 million barrels week over week and are 12% below the 5-year average for this time of year. U.S. crude imports averaged 6.6 million barrels per day last week, an increase of 1 million barrels per day week over week. Over the past 4 weeks, crude oil imports averaged 6.2 million barrels per day, 1.9% less than the same 4-week period last year. U.S. crude oil refinery inputs averaged 15.9 million barrels per day during the week ended June 4th, which was 327,000 barrels a day, more than the previous week average. Refineries operated at 91.3% of their operable capacity. Oil is higher in overnight trading, and WTI is poised to open at $71.55, up 64 cents from Friday's close. Total North American rail volumes were up 12.2% year over year at the end of week 22, resulting in quarter-to-date volumes that are up 23.5% year over year, and year-to-date volumes that are up 12%. 9 of 11 of the AAR's major categories had increases, with the largest coming from intermodal at plus 9.4%. Coal was up by 31.3%. Metallic ores and metals were up 37.2%. And last but not least, chemicals were up 14.8%. North American rig count is up by 21 rigs week over week. The U.S. was up by 5 rigs week over week, and has 182 rigs year over year. The U.S. currently has 461 active rigs. Canada's rig count was up by 16 rigs week over week and up by 72 rigs year over year, and Canada's rig count is 93 active rigs. Year over year, we are up 254 rigs collectively. We thought that we might highlight an international rig count in this week's podcast. Total rig count outside of the U.S. and Canada is 750 active rigs. While down 55 rigs year over year, a significant jump of 55 rigs occurred during the month of May. Folks, people are drilling at these prices. Expect rig count to continue to rise worldwide week over week in the current price environment. U.S. producers are seemingly more disciplined in adding rigs. You know what the old saying, once bitten, twice shy. A few things that we are keeping our eye on. Petroleum by rail. The 4-week rolling average of petroleum carloads carried on 6 of the largest North American railroads rose to 23,410 from 23,234, a gain of 176 railcars week over week. Canadian oil supply is set to climb to a record high in the second half of 2021, the IEA noted in its latest market report released Friday of last week in May. As in April and May maintenance weighed heavy on Canadian output. Total supply was estimated to be 5.3 million barrels a day, 500,000 barrels per day above May 2020, but 400,000 barrels per day below Q1 21. Suncor Energy delayed maintenance initially scheduled for May at its base place upgrader because of COVID. According to Suncor, the turnaround will now begin sometime in June, but most likely later in the summer. Bottom line, a tailwind for crude by rail with no pipe to lop up the excess. Expect basis to widen in Alberta and crude by rail to take hold in Q4. TC Energy Corporation confirmed it last week after a comprehensive review of its options and in consultation with the Alberta government, it has terminated the Keystone XL pipeline project. We're surprised to hear about this. It was PFL's thought that there would have been a decade of work put into this project and thought it would have got on a temporary hold pending a political shift. Yet another tailwind for crude by rail. Rail cars in storage. The AAR released its monthly data as far as rail cars in storage, and there is 363,700 empty cars, representing 22.1% of the North American fleet. This is a decrease of 1,700 units month over month, and 157,000 decrease year over year. We're expecting rail cars in storage to continue to decline as the fleet readjusts and scrapping prices are high. Folks, the reading of PFL's rail report is a must. Not only do we go into a lot more depth of items that we've touched on in this podcast, but we highlight Exxon's big oil discovery, California power problems, and global supply chains on squeeze as it relates to solar and soaring energy green crisis as the government pushes the green agenda forward. Well, that's all for this week's podcast, folks. We hope it was helpful. PFL has been active in railcar repair, railcar cleaning, leasing, subleasing, strategizing on lease return, and so forth. Please give us a call if you'd like to troubleshoot any matter. 239-390-2885. And of course, our website is pflpetroleum.com.